Hello everyone and welcome to this Autovista Group webinar on Europe's used car markets, recovery from COVID-19. I'm Phil Curry, editor of the Autovista Group Daily Brief, and today's webinar will see us talking about the COVID-19 third wave, the impact on used car markets and expectations for 2021 and 2022, followed by a Q&A session with our experts. Now, today I am joined by Autovista Group's Dr. Christoph Engelskirchen, who will be leading our presentation discussion today. And he'll be speaking with Joël Oriel, Robert Madas, and Johan Truus. Now, before we begin, I just want to very quickly talk about the Autovista Group Daily Brief. This is an email newsletter delivered every morning directly to your inbox, bringing you the latest news analysis and industry insight on the automotive industry. You can stay up to date with latest developments as they happen and also have a look at some of Autovista Group's unique data sets and see just what is impacting the automotive market today. We use our pan-European team of experts together with the dedicated Daily Brief team to bring you the best news analysis that we can. And we also have a range of videos and podcasts. So make sure you sign up. That's the Autovista Group Daily Brief. Visit autovistagroup.com/sign up and put your details in the boxes. Now, at the end of today's session, we will have a brief Q&A. So please do feel free to ask any questions by using the question box on the right-hand side of your screen. I may even be interrupting our experts during this session, so be prepared, guys. Any unanswered questions, we will do our best to answer at the end of this webinar. So if you do have a question, please make sure you ask it during the session. And finally, we are recording this and also will make the slide deck available after the webinar. So if you do miss any details, don't worry, you'll have them soon afterwards. Now I'd like to hand over to Christoph, who will take us through.
We would like to kick this off with a little bit of a poll, like we always do. So if you have come to our webinars before, we usually have at least one poll in there. And this one is a rather simple one. We would like to ask you which of the following best describes how you are feeling about used car markets in 2021 and 2022. So are you rather more positive towards used car market opportunities and developments? You think they will perform very well? Supply shortage for new cars is helping maybe, and the economic recovery will be rather swift. Do you have a mixed view on used car markets, maybe because they will perform differently across Europe and because you believe recovery will take a bit longer in some markets, maybe even a couple of years? Or are you more negative towards used car markets? Do you think they will come under pressure over the coming 2 years? The supply shortage will end, government stimuli will continue, and OEMs will start to push the metal again of new cars and supply pours into the market. So let's start the poll, and please take your time, but it's not a very scientific approach here. We just wanted to get a bit of a sentiment from you, so don't worry too much what you click here. It'll just be interesting to see, and we will share our view, of course, as well as we continue with the webinar. So let's give it a couple of seconds. I see, okay, I see a lot of responses now. Make your choice, and I think we're now ready to show you the result. Yeah, so this is the bit what we expected. There is a lot of positive momentum in the market at the moment, and there are good reasons for that. And we will cover these reasons why people believe that markets will develop quite positively. But there are quite a few of you that still say, yeah, let's wait and see. I mean, it'll be mixed. There are very big market differences potentially, and also those we will cover in this webinar. So thank you for responding, and let's move on to look just a little bit into the past 14 months. And what we've done here is we show you price index for, I mean, these are retail offer prices and how they've changed over the past 14 months. Now, every line in each of these charts represents a country. And on the top, you see our lines for budget cars. So a graph for budget cars, so cars that are a bit older, 19 months or older. And you can see that they have been developing quite positively over the past 14 months as people sought safe modes of transport in particular. If you look at the chart on the bottom, the off-lease vehicles, so roughly 36 months, maybe a bit older even, those are the biggest share of used car market transactions. And for those, the picture is a bit more mixed, right? So yes, they are at pre-pandemic levels. So used car markets have been quite resilient, but you have to account for some supply issues. So some of the leasing contracts, for example, they got extended as new cars weren't there to replace leased cars. So there's also little pressure in the markets because there were little or fewer cars coming back to the market than in normal times, but quite resiliently. And this is relatively consistent across markets. So let's look at one of the markets with a bit of a deep dive. And when we picked Sweden here, because Sweden was one of the most elastic markets. And first question to Johan, why such an elastic recovery and development in Sweden?
Yeah, what we can see on this chart is the asking price development from pre-pandemic until today, divided into age clusters. And we could see a quick dip in the asking prices in the beginning of the pandemic, where many dealers wanted to sell out their cars in order to not have too much in stock if the situation would get worse. Then we saw a good recovery from May onwards, and I think that recovery comes from a number of things. And one big factor is that most parts of the Swedish society have been open during this whole pandemic. So people have been allowed to go to dealers, look at cars and test drive cars. There has also been a high demand for used cars for daily commuting when people want to stay out of the public transports, and for longer journeys when people are spending their vacation times in the country. The lockdown and closure of many factories in Europe also made the demand for used cars higher. And we can see that now when the vaccination has started in the north, and we believe that this vaccination should be over by the end of the summer, but we still see a big risk that most people will spend the summer here in Sweden, where they need to have a car to go in. We can see a bit of a flatten in the recovery in the beginning of 2021, and we can touch upon that a bit later.
Let's look at a couple of more countries if we move on. And I mean, basically, we have described the recovery as a 3-speed recovery, or 3 speeds of recovery. So we have a lot of markets that are, sort of, behaving quite resiliently, slightly ahead of pre-pandemic residual value levels or at those levels. But we also have a couple of markets that stick out. And here I wanted to highlight Portugal and Poland. Yeah, so Poland is the line that is steeply rising on the top of the chart, and Portugal is a little bit subdued. So let's ask our other 2 experts here. And I would like to start with João. So in Portugal, there are 2 questions actually. So first of all, the prices, they dropped much faster than in other lockdown markets. So they dropped almost as fast as in Sweden. Yeah. So first question, why such an elastic recovery also in Portugal? And then secondly, why are prices still, performing slightly? I mean, we're not talking about a dramatic drop, but they're still performing below pre-pandemic levels, whereas, for example, Spain is developing a bit more favorably. What's the rationale for this?
Yeah, prices in Portugal dropped a little bit faster than in the rest of Europe because Portugal has a different dealer setup, more independent decision making. They react faster than, for example, in Germany or Spain, where there are larger groups or importers. And why are we still below pre-pandemic levels? Over the past year, also in Portugal, we saw a good recovery of used car market, almost to pre-pandemic levels around October. But the extent of COVID-19 crisis and the soft economy has put a halt to the rise, and the price went down a bit further. We can see a price recovery in the beginning of this year, but a lower demand due to a new lockdown push again prices down, even if a smooth drop. Prices are now stable. When comparing with Spain, Spanish market has a different behavior. Spain has a different market structure. The weight of all the cars in the mix is higher when compared with us. And also the WLTP introduction has a positive effect in amount in the used car market of the younger vehicles.
Okay, so that's a good explanation. Thank you. And for Poland, I think we should also talk about that trajectory, which is quite different to other markets, but we see this in Eastern Europe and some other markets as well. So, Robert, could you help us explain this a little bit further?
Yes, as we saw in the previous chart, Poland is up 6% versus pre-pandemic levels. This is much more than in any other market we track, and the trend is consistent across all age groups. The main reason here is the current lack of supply on the used car market. On average in Poland, stock levels are now down 20% compared to pre-COVID. For some age groups and vehicle types, the stock is even less. But demand is still stable on the used car market, also because of long delivery times on the new car market. So those are the reasons.
And if we stay on Poland and move to the next slide, because it's such a visible gap that's appearing in Poland, but also in other markets. But Poland is quite obvious in Poland. Robert, what do we see here? Why do we call it the Amazon effect?
What we can see here, especially the orange line, is the interesting one. That's the development of asking prices for LCVs. As you can see, the prices for LCVs rose by almost 15% in Poland compared to pre-pandemic levels. But this vehicle type also performed supremely well in other European markets. The reason is one of the few winners of the pandemic are online retailers like Amazon.com, that's why we call it Amazon effect, but also local players. In Poland, for example, Allegro is really strong. And this boost in online sales has led to further demand for LCVs, mainly for delivery of parcels. And there is limited supply on the used car market. Asking prices are increasing, as we can see here, especially strong in Poland. And for new LCVs, delivery times are really long. Discounts are decreasing. So clients are redirected to the used car market with this limited supply, and that's the result, rising prices.
Okay.
Robert, just one quick question has come in, sorry. As things start getting back to a new sense of normality, once vaccination programs have rolled out, do we see the Amazon effect continuing into 2022 and beyond?
I think this depends very much on the markets, but in Poland, we really see that the LCV market is quite empty for new cars as well as for used cars. So there is such a lack of supply that we believe this situation will take a little bit longer to normalize, and we can see this effect also continuing in the next year.
Thank you.
So let's look at our expectations for the coming 2 years. And And some of the aspects that we have talked about on the previous slides, they will be revisited in the section as well. So we have markets developing quite differently out of the crisis economically. For example, Poland is one of the markets that has excellent forecasts actually economically, and and we will see that with much quicker rise in demand for vehicles, for used vehicles in particular. And if we look at another important KPI that we're tracking across markets, is this one. It stays in stock, and obviously the higher days in stock are, the longer it takes to sell a car and the more pressure you might see on residual values. Now we have effects here, of course, of lockdowns. Yeah, so if there's a lockdown, you see days in stock obviously rising. But what we also see now is that we are in most markets again at the level where we were before the pandemic started. And I think this is a question again that I would like to ask all of the market and regional experts in this call. So why are days in stock back to pre-pandemic levels? Should we be anxious about this? And maybe Johan, you can answer first.
Yeah, I think that when it comes to Sweden, since I mentioned there before, the Swedish dealers have been able to keep their shops open throughout the pandemic, and we can see the stock days go down, and then we can see an increase now in the end of the year. And I think that it's more related to normal seasonality effect, where we in late part of the year in December, we can see many registrations in order to hit targets and to come into the right place for manufacturers. And then in the beginning of the year, these cars needs to be sold out, so everything takes a bit longer time. We also have some strong private lease offers in the market in Sweden at the moment, which can help in this. So I think it's more of a seasonality effect and not so much of a pandemic effect.
I think I can confirm this actually for our region here. Stock days are generally influenced by seasonality effects, and we see this rise especially over Christmas and in the beginning of January. But if you look at the right-hand side of the chart, now the level is stable, or in some markets already decreasing again. And the main reason here is the supply-demand imbalance that I described before. So in some markets, you mentioned Poland, and this is one of the examples, there are still low stock levels, and thus also the days in stock are on a low level currently. So we do not have to be worried here in many markets.
And Joao, what about Spain, for example? You mentioned WLTP, for example. I mean, do we see those effects on this chart as well?
Yeah, in Spain, stock days rose swiftly to pre-pandemic levels towards the end of November. And from there on and until the first week of January, the days in stock start increasing, but that is normally due to seasonality effects. During January and until now, the days in stock drop, and the main reason is the appearance in the used car market of younger vehicles matriculated in December 2020 due to tactical reasons such as sales targets, environment targets, and the introduction of WLTP in 2021 in Spain that increased the new car price.
Okay, so we still have a bit of supply-demand imbalance. So the days in stock, they don't give away too much of what the future will bring. So let's move on to another theme, which is very impactful in our view, and this is the incentive situation across Europe. And at this point, I'd like to remind you that you can download our white paper free of charge if you go on the link on the bottom of the chart on our homepage. And we have also updated in this white paper our EV tax guide, so an overview over the simulation and government incentives across 19 European countries, although not all 19 European countries that we cover do actually subsidize. And on the left chart, on the left side of this table, you see the stimulating effect for new car sales. And on the right side, which is the more colorful part of this table, you see how much negative impact we see or even still expect on residual values for these electric vehicles. Now in blue, marked in blue here are the changes versus our last version of this, which is from November 2020. And you can see that there is a lot of dynamism here. There's a lot of activity in terms of stimulating effects in Europe. The latest edition here was Norway. We added in this white paper, and the magnitude of incentives in Norway, although they did cut back in the past years, is still above everyone else. So in Norway, you save around 11,000 euro in acquisition costs if you buy a BEV. So basically it makes BEV equally expensive, maybe even slightly less expensive, just from an acquisition cost perspective. But there are more incentives that you get in Norway. For example, you save in parking, you save road taxes, you have company car tax benefits. And we see, and this is why the X in Norway is on the leaning towards the right side, there is residual value pressure building up in Norway. But what it also tells you is, and Norway has 50% BEV market share, if you want to get to those levels, you need to subsidize, right? So this is a theme and an external factor that we have to incorporate in our thinking, in our outlooks when we talk about battery electric vehicles in particular. And if we move on,
Christoph, sorry, can I just bring another one in there? Does the incentive scheme details that you've shown there, did they include the new Spanish movers free? And also, does it take into account the UK's decrease in its government grant towards battery electric vehicles of £1,000?
And yes, I mean they do. So, for example, in Spain, we moved to three pluses in terms of stimulating effect because it's a very generous plan. Movers 3 is much more generous than Movers 2. And in the UK, where incentives are only applicable really to battery electric vehicles, it got cut down a little bit, and we reflected this as well in the white paper. Yeah.
Thank you. Just another couple of things, or one thing, sorry. A couple of people have asked about if the presentation will be available after the webinar. Yes, it will be. So all the links that you see on the screen right now, you will receive a PDF, and these will be clickable, so you can find our white papers on the links provided.
So let's look at a real life example. So this is the residual value development for Germany for the C SUV, B and B SUV segment, weighted. These are our monthly published values. So this is not the daily dealer offer price index which we've showed you before. These are actual monthly valuations which we publish. And you can see that in Germany, which is one of the markets that is probably second after Norway in terms of magnitude of incentives for PHEVs and BEVs, you can see the pressure on those electric vehicle powertrain types, whereas for petrol, you can actually see them rising, right? And so incentives is one theme which pushes electric vehicle residual values, or has been pushing them down a little bit, right? But there may be other reasons for this as well. And I've asked Johan whether he could shed some light onto what other factors are actually influencing residual value formation for battery electric vehicles.
Yeah, in In Sweden, we can see that the incentives are playing a really big role, but also so we have incentives that in the leasing sector in Sweden today are causing an economical advantage for a battery electric with 10,000 euros compared to a normal diesel, comparable diesel. And in the used car, for the used car buyer, there is no such benefit at all. So we benefit the new car buyer, but we don't have any incentives in the used car market. We also need to take into consideration the huge number of new battery electric vehicles that will enter the market in all the different segments and in all different price ranges during this year and next year. So that will also have a dominant role on the used car values.
And Robert, I think you wanted to add something as well.
I wanted to add one effect that we should not forget here, because we see the trend for 3 years old cars and our quotations for those cars. And the trend is similar in many markets. We see Germany now on the screen, but in other markets we see similar trends. And we don't have to underestimate the life cycle effect, meaning that technology is aging faster in electric vehicles. And this also leads to decreasing RVs for these types of vehicles. However, if you look at this segment or at this powertrain for younger models, for example, for 12 months old EVs, then the picture looks differently. And these vehicles are not so much under pressure like the older ones, and that's due to the life cycle effect.
Thank you. So we have incentives, we have lower list prices, and fresher models coming to market, which always puts existing ones a bit under pressure. And we have the effect that you just mentioned, that younger used cars also generate a bit of a better value than compared to other cars. But as I said, the traditional engine is, so the internal combustion engine is still performing quite well on many used car markets. It's the dominant powertrain type. Now, when we talk about the outlook for 2021 and 2022, and I promise it'll come just in a couple of minutes, we'll show you our outlook. There are a couple of factors which we have to incorporate, which go beyond our normal forecasting, because times are very different now. So I would like to ask Robert to lead us through this chart, and what are the external factors that we need to incorporate, and also how do they apply differently in different regions? Robert, over to you again.
Yes, so those are the factors that we apply in our outlooks as external factors. The first one that we see here is the speed of vaccination progress. In some countries, we have a fast pace at the moment, for example, in Poland and also in Nordic countries. In other countries, the progress was a little slower than expected, for example, in the middle of Europe, like in Austria and Germany, even though there is some more momentum now. And this depends very much on the local vaccination strategies and on the availability of vaccines. So this is a mixed bag here, depending on the country you look at. The speed of economic recovery is another external factor we incorporate. We see fast recovery in Eastern markets, also in particular in Poland. Generally, the North is faster than the West, and Southern Europe has a little bit more subdued outlooks, so the economic recovery will take a little longer. When we look at the market factor, continued supply shortage of new and used cars, this is impactful in some markets. This is specifically impactful, for example, in Poland, but we also see moderate impact across all regions in virtually every country due to the reasons we have discussed before. High incentives creating a supply and demand imbalance for electric vehicles and ICEs is another external factor. You talked about this quite a bit now, and it's more impactful, obviously, in higher incentive markets. And you can read the details in our Autovista Group white paper dealing with this factor. And finally, rising list prices for ICEs, also due to exchange rate weakness, and generally rising list prices are impactful across all markets. So this also influences the outlooks that we publish.
And it does so in a positive way, right? So rising list prices for IC is actually, helping used car values for the ICE engine for existing cars in the market. So let's look at our residual value outlook. We're looking again at offer price developments, retail offer price developments here. On this chart, we did group them, right? So we did group in an unweighted way different countries into regions, because otherwise we would have seen 19 lines and we wouldn't really have seen anything. But if you go into the white paper, you have our country outlooks or individual country outlooks that will make more sense for you if you are looking to get more details. But we've talked about how Eastern Europe, so the top line on this chart, will recover quite substantially. Poland is actually on the top of that performance, but other markets are also performing quite well in Eastern Europe. So is the expectation. Can we talk quickly about the regions that we have on here? So Robert, maybe you could talk about the Alps region and what's the view on development in the Alps region before we move on.
Yes, because we covered the Eastern European perspective quite a bit, it sticks out, as you can see on this chart on the top line, but also the Alps region with Austria, Switzerland, and Germany. We see an increasing RV trend during the coming month in this region, with an increase of asking prices between 1.5 to maybe 2.5% compared to pre-COVID levels. The main reason here is the stable recovery of the market and a continued limited supply, and also the stable demand that we still see on the used car market in those countries.
Okay, and it's mostly affected by the internal combustion engine, because those will be the dominant cars still on used car markets for the next 1 to 2 years. If we talk to Joao, if we talk about the Southern European markets, and again, we've grouped quite a few markets together in this chart, but it is continuously the lowest line here in this chart. Can you just summarize again what's driving that subdued view versus the rest of Europe?
Yeah, Southern Europe will have a weaker economy recover than other European markets. We have taken in consideration the GDP and unemployment forecast rates that shows that only in the end of 2022, we will be in line with 2019. It will take time to get consumer confidence higher in order to push the economy and reach pre-pandemic values. The RVs will continue to perform around -1%, -2% versus pre-pandemic values. One point I also want to make is in Southern Europe, but Portugal in particular, on used car markets, the diesel engine continues to account for more than 60% of the sales done in the last 2 years and in the first 2 months of this year. The demand remains high for this type of vehicles. But that does not happen in new car market, where diesel has lost and continues to lose market share. So we need to wait in order to see if our government will penalize ICE vehicles with more additional taxes in 2022 or in the following years that can affect the values. Lastly, there is still a risk that a third wave of COVID will hit all European markets harder than we currently estimate.
Okay, so in Southern Europe, it's rather the economic outlook that's impacting here. If we move to the north, we did separate here Finland, Sweden, north, and Norway, because the dynamics are very different. And Johan, maybe you could help us understand those differences a bit better.
Yes, for Norway, as you mentioned before, Christoph, there are high incentives, and there has been high incentives, and they have a really huge number of BEVs in the new car registration market. And as Robert mentioned earlier, the life cycles for battery electric cars are much shorter, and therefore since there are many more electric cars entering the market this and next year with longer ranges and overall better, we see a high pressure in the RV outlook for Norway, since they have so much incentives and so many used BEVs on the market. For Sweden and Finland, we don't have the same number of electric cars in our used car park. We see that once now everybody has their vaccination, things will go back to more and more normal, and we believe that there is a slow and steady residual value during the next years.
So if we look at the priorities for 2021 and 2022, so our advice or our verdict on what needs to happen to make the best of the situation. Number one is clearly and by far the cross-border remarketing skills that need to be honed, that need to be developed and professionalized. Because first of all, for all powertrains, we see a strong trend towards leasing flexible ownership models, in particular also for electric vehicles. And this will drive up the number of young used cars into the market. Estimate is around 55% more cars to be remarketed in those young segments until 2030. And they cannot be absorbed all domestically because situations are very different country by country. Second point, there is a overstimulation in high subsidies markets, and in particular for BEVs and FEVs. For example, in Germany, the benefit in kind tax benefit for driving a FEV is really high, and it will create more cars that used car markets can easily absorb. So those cars will need to be absorbed by other markets, and we're not saying that this is not possible, but they do need to be sent to other European markets, and cross-border remarketing therefore is important. And for the internal combustion engine, the third sub-bullet, we actually think there might be a significant remarketing opportunity due to the supply shortage. So don't expect residual values falling off a cliff anytime soon. Instead, look for opportunities to remarket those cars in markets that are just not there yet for electrification. So for example, Eastern Europe is high demand for those cars. Second bullet, a TCO perspective, in our opinion, is a must if you are selling electric vehicles, new and used, in particular BEVs, because you will have to justify higher transaction prices and versus the ICE, because, for example, a battery electric vehicle saves you money when you look at utilization costs, and those are very different across different markets. Thirdly, this is more towards OEMs. There will be a post-subsidy scenario, not anytime soon. It'll take a couple of years until they disappear, but yeah, I mean, pricing in particular is an area that needs to be worked on. The list prices for BEVs have to come down, or for ICEs have to rise. The gap has to become smaller in order for residual values to stabilize as government grants run out. And some positive outlook as well. With rising infrastructure, we believe that the life cycle effects for battery electric vehicles will soften. So even I mean, soften in the way that they will not be as impactful anymore, because if ranges play less of a role for suitability of daily use because of rising infrastructure, that could actually be beneficial for residual values of older generation electric vehicles. So that would be supporting residual value formation, the buildup of infrastructure. And with that, I think we could move on to the Q&A part of this webinar, Phil.
Indeed, thanks guys for some brilliant insights there. Now, just conscious of time, so again, please bear in mind if you have asked us a question and we don't answer it, we'll do our best to get back to you after this session has ended. We've had a couple in. First of all, on the forecasts, did forecasts improve for 2021 and 2022? And why are you so positive about used car forecasts?
Yeah, I think I can take this one. Yes, the forecasts did improve for 2021 and 2022, and I think there are 2-3 reasons that really play a role here. I mean, first of all, and we've said this, there is a continued supply issue, yeah, of new cars and used cars. It used to be COVID related. Now it's still, of course, COVID related, but it's also related to, for example, semiconductor shortage, and this is just creating much fewer cars on new car markets, but also on used car markets. The second point is that the combination of extended lockdowns, but also strong government support for private people, and the inability to spend money anywhere else really has helped more luxury products, more investment products to thrive, and the car is a costlier investment, and cars are being sought after. And as people may not be able to get a new car because there are few of them available or they're too expensive, they're looking for used car alternatives. So that's also helping. And I think maybe third reason, there is the development when we talk about vaccination, but also sentiment of people, of businesses is quite positive. So there's a bit of a fear of missing out trend, and people are looking to get their freedom back and their mobility back, and cars are part of that equation.
Okay, thank you. Next, we've seen quite a decline of battery electric vehicle RVs on one of your charts. What about the outlook for EVs?
Yeah, I mean, excellent question. And the values that we've shown today, they are in fact looking more towards internal combustion engine cars, because there are so few electric vehicles on used car markets, exception Norway, and you see where those values are developing towards. So there is a bit of a downward pressure. I suggest you look up one of our last webinars, which we did in February, I believe, on electric vehicle outlooks. Yeah, so it's in another webinar that we did in February, the answer to that question.
Right, okay. Another one's come in. Purchase incentives for battery electric vehicle are certainly impacting used prices for young used vehicles. From your perspective, up to what holding period is an impact of a reduced new vehicle price noticeable?
I mean, anyone willing to take that question? Maybe Robert, is there a question that you could give your view on?
Could you repeat, Phil? I did not get the last part from my audio.
That's fine, no worries. So the purchase incentives for battery electric vehicles are certainly impacting used prices for young used vehicles. From your perspective, up to what holding period is an impact of a reduced new vehicle price noticeable?
I think what we see now is that RVs for battery electric vehicles suffer specifically after 36 6 months and older. So here we have a really strong impact. On the other hand, with the supply now generating new models on the market in all the segments with list prices coming down, I think this effect becomes also less pronounced, as Johan also mentioned, that these life cycle effects will soften a little bit. So I think currently the pressure is on cars with around 3 years and older in this with these powertrains, and not so strong for younger cars.
Yeah, but I would probably add that when we're talking about incentives and low list prices, the biggest absolute effect is for those incentives are on transaction prices for young used cars, because it's very easy to compare a 1-year-old car to a new car because they're pretty similar, right? The further you the older the car gets, the less pronounced is the incentive that was given at the point that car was sold new. But the actual current level of incentive that is still high, that also washes down to older electric vehicles, but the absolute impact will be smaller because residual values are already at a lower level, much more detached from the new car transaction price.
Thank you. Now we are at the end of our 45 minutes, so apologies if we haven't answered your question, but like I said, we will make sure we get back to you. We have all of them logged. Now, you would have noticed, of course, that some of the charts, graphs, etc., had links at the bottom. We've been taking data from related COVID-19 white paper, which will be available at autovistagroup.com on the website. Just click on the right-hand side for the coronavirus gateway. Other charts have come from the Autovista's Group's residual value intelligence. Details are now on screen for a 7-day free trial. Please contact Tim Budgin. This tool allows you to get review trends and gives context to analysis across different dashboards, across different markets, brands, and segments. So please do contact Tim if you would like to take up the trial. For now, I'd like to thank our panel for joining us.
Thank you.
Thank you.
Thank you.
And don't forget, of course, subscribe to the Autovista Group Daily Brief. Details of the white paper will again be included in tomorrow's email, and also we'll be bringing you details of our future webinars. Thanks for joining us.